I'm Cloud with this week's Precious Metals Market Update. I'm going to mention the date that we're recording this on June 7th, 2017, because that will be important as people watch it and hear the numbers. First of all, we're 3 weeks away from the halfway through the year, and the performance data so far through yesterday for the 6 things that most of you follow, the 4 precious metals that we sell: gold, silver, platinum, and palladium, and then the Dow Jones and the Nasdaq. Certainly all of them have prospered under a Trump administration, and the primary reason for that is the dollar. The dollar is being trashed worldwide, and in my opinion, no hope in sight of the dollar going up. And quite frankly, Trump's made it very plain, he doesn't want the dollar to go up. He wants our debt to get paid off with cheaper dollars, and he likes inflation because it's good for real estate, and the way he's made his vast wealth is that's the scenario he's been under. So it's not hard to see why we're seeing interest rates go up, the dollar go down, and precious metals and the stock market prospering from his politics so far. So let's take a quick look since January the 1st of those 6 investments, and we'll call them out in order of performance. The number 1 has been Palladium. Palladium is up 25.2% as the world looks at Trump starting a economic prosperity and car sales worldwide increasing, especially for new cars, and demand for palladium picking up. So those that are playing that game, palladium should go higher than it is, even though it's already up 25%. Sitting in second place is the Nasdaq, not the Dow, the big stocks, but the broader stock market, and it's up 16.1%. Nowhere near as good as 25%, but 16% for less than a half a year has been an incredible run in the Nasdaq. Number 3 is gold. Gold is at 11.75% through today, as it's gone from $1,159 to $1,292, and we're seeing a shortage of gold in Asia and the Far East. And we saw China last month make one of their largest purchases in tonnage in history, as rumor has it they're still preparing for a gold-backed currency in the next 18 months. And we've seen Dubai come out with a gold-backed currency for their citizens on June the 1st, and many people believe that it's a precursor to China watching how it's received and having parallel currencies that are fiat currencies, as well as currencies that are backed by gold or partially backed by gold. And you can be assured China's watching this like a hawk. While nobody's talking about gold, it's up 11.75%, in my opinion, going much higher this year and next year. In fourth place this year is silver. It's up 9.8%, in my opinion, is lagging behind and will catch up because the same demand for industrial uses, especially the solar panels, are going to really escalate silver, as silver could be wiped off the planet Earth within 5 years if China builds and makes. We now see Tesla co-oping with to build a factory in the United States up in Connecticut to also build solar panels, and they all need silver, and we can see that silver vanish from the market. So watch this closely as silver is up 9.8%, but lagging about 2% behind gold so far. In fifth place is the Dow. The Dow Jones Industrial is up 6.6% this year. And in last place of the 6 is platinum at 6.3%. So just think, while the bond market is down this year, there are still over $84 trillion of bonds sitting in the bond market. With interest rates going up, bond yields are going down, the bond market is going down, the liquidity for bonds are going down, and we're starting to see a slight rotation of money out of bonds and fixed income and these kind of investments. And we think that trend is going to continue, and gold and silver and the stock market is benefiting from people coming out of bonds. And I think that will pick up as the economy picks up. But here's the worst thing you got to look at. The dollar's down 4%. Trump's been in office 4 months. The dollar's down 4%. But instead of gold being up historically about 40% when the dollar goes down 4%, it's only 11.75 or 11.8% so far this year. So gold has a lot of way to catch up. And then there are the rumors, and many people saying the truth. I can't verify it, but we're seeing Goldman Sachs and these major brokerage firms now loading up on gold, and we're seeing the shorts disappearing in gold and silver for that matter. So the next question comes, when will they go long in the paper market and continue to purchase gold and silver in the physical market? We know what it looks like when they do, because we saw what year 2000 to 2012 brought was gold going up 5.5 times, and these companies, instead of going short in the futures market, they were going long. So we think we're on the cusp of these people like JP Morgan, Goldman Sachs, large companies trading their positions in the paper market, because now they bought a lot of gold, they bought a lot of silver, especially JP Morgan in the physical silver market. So now they're ready to run their investment up, and the way they do that is quit going short and accumulating it and cash in and move it forward. And we think that's going to happen. If not already, we're seeing the shorts disappear and shorts being covered in the futures market. So we do think there's a quiet time here in June and July. If history continues, it's a pretty quiet month for metals. But usually we see the last 4 months produce over 50% of the profit for the year. So we've got some real hope with the amount of gold and silver up the first 6 months, and knowing that the last 4 months historically produce bigger returns than the other 9 months put together. So we're real excited about where it is. And we're still having big trouble. And the company we're affiliated with in Asia is having trouble keeping inventory. It just comes in and it goes out. So America is still the cheapest premiums and the best place to buy physical. But how long that will be, I can't tell you. It could end in a few days, weeks, or months. But I do think you're going to see premiums going up later this year and into next year. It's going to cost you more percentage-wise to buy it over spot as it does now. And the silver deals that we've seen have all disappeared. So a lot of you took advantage of it when you could buy it 20, 30 cents below normal for that particular product. So just be ready. Gold and silver should be in every portfolio in the world. It should have anywhere from a 5 to 25% value of your portfolio, and I certainly think it's more like 15 or 20%. Money managers are starting to catch on, certainly nowhere near where they should be, but we are seeing more and more money managers in my consulting business that are coming in, talking to me, getting ideas, and seeing how it works, what I think, what it was like in the 41 years I've been in the business, what has happened. So we're here to answer your questions. We continue to have the best storage deals in the world in 5 different depositories around the world. You can call us. We can tell you about those fees. We can be reached at 800-247-2812. That's 247-2812. And if you want to roll some of your IRA money into a precious metals self-directed IRA, we can help you get the custodian and function as your representative and broker and work with you on the percentages. And the ones of you that deal with us know our commissions are very low, 3% and below on the front end and nothing on the back end. We work for you and get you the highest price we can get you with no fee, and we ship free to you. Just mention that you heard about us on FTM Daily. So hopefully we'll hear from you in what historically is a quiet time, but we do think there's going to be fireworks, and we do think the dollar is in for its thing. And we'll spend more time talking about the Silk Road, the trade, and why we think the dollar is headed, in addition to Trump in his first dealing with the debt ceiling, raised it $1.1 trillion, more than Obama ever raised it. So just keep the eyes on that because we know what made Trump wealthy. With this week's Precious Metals Market Update, this is Tom Cloud signing out.